So this is the sixth year that I've done a review of the Orange County real estate market of the previous year and put together a forecast for the upcoming year. I also am going to go over and critique the forecast that I made last year. And let's just say that I hope, based on what I had to say, that you didn't go long in the bond market. But before we do that, let's take a quick look at December and take a look at what happened there. Firstly, interest rates. The month started at 6.81% for a conventional loan, dropped a bit, and then jumped up, ending the year at 6.91%, the highest interest rates we've had since early July. On the supply side, we ended the year at 2,699 homes on the market. That was down about 350 from the beginning of the month. Now, this is a higher number than we had last year, but December, still the lowest inventory numbers we've had since tracking began 20 years ago. On the demand side, things were similarly down throughout December, again, to the third lowest sales numbers for December that we've had in the last 20 years. Now at 76 days, it's getting pretty close to a balanced market. Not quite, still a slight seller's market, as I said, but we're gonna see this heat up as the first few months of the year begin. We'll have more buyers entering the marketplace, but inventory won't be catching up. More buyers chasing fewer listings. So now, let's take a look at what happened in 2024 versus what I thought would happen in 2024. Forecast number one, interest rates. The anticipation was that rates would be in the mid-fives somewhere in the second half of the year. What actually happened is the low interest rate was in late September at just over 6%, and then the final 3 months of the year saw a very consistent increase. So the summary, totally failed forecast, rates never significantly dropped. Forecast number two, inventory. I anticipated that inventory would hit peak levels between 3,000 and 3,500 homes for sale, and that was a small increase from 2023. What actually happened is we ended up just under 3,700, the highest inventory level we've had in 2 years and significantly higher than I thought. Summary. Well, maybe not significantly higher than I thought. That's pretty close. Forecast number three, price appreciation. The anticipation was 3 to 5% average gain for the median price in Orange County. What actually happened is prices were up 8.3%, a significant jump. The summary of this one, failed forecast. Prices went up significantly more than I thought they would. Forecast number four, the inventory sales cycle. The anticipation is that things would be completely normal. High sales in the spring, high inventory in the summer. But what happened, sales actually did peak in May, so that was what I expected, but inventory didn't peak until late September, which is significantly late. Usually it's a July or August peak inventory number. So the summary on this one, this forecast was mixed. Now the reason why inventory kept climbing is interest rates started going up, and that dampened demand. If we had interest rates go down, those houses would have been gobbled up by the late summer, early fall, and we would have reached the peak inventory probably in August. Forecast number five, sales quantity. The anticipation was 21,000 to 23,000 closed sales in Orange County. That would have been a 10 to 15% increase more than 2023. The reality was we were just over 20,000 units, a little bit lower than I thought. So I was close, but they came in below my low estimate. Again, if rates had dropped more, sales would have been up. So 5 forecast, 1 was mixed, 2 I got pretty much right, and 2 I totally failed. So the way I look at that is if I was playing baseball, I'd be hitting 400, but that's not the way it works. I got 4 out of 10, which is an F. So now, based on that track record, let me tell you what I think is going to happen in 2025. Forecast number 1, interest rates. I don't expect interest rates to change much at all. 6.5% to 7% is going to be the range throughout the year. I do not anticipate any big swings up or down unless something dramatic happens to the economy. Forecast number 2, inventory. It's going to be a slow build. I do think inventory is going to be up 14 to 22%, a significant jump. I think this summer we're going to have somewhere between a 4,200 and 4,500 unit peak. Forecast number 3, price appreciation. I don't think that houses are going to go up in value as much in 2025 as they did in 2024. I'm going to guess somewhere between 3 and 6%. Now, if more inventory comes on the market, or if interest rates go up, or some combination thereof, we'll see less appreciation. But if fewer houses come on the market, or if interest rates go down at all, we'll even see greater appreciation. And here's why I think that. Inventory is still relatively low. There are a lot of buyers that are still looking for houses. Even though interest rates have dampened interest a little bit, there's not as much of a mania as there was, say, certainly in 21 or even 22, but there's enough of an interest for just a little bit of price pressure all the way throughout the year. Forecast number 4, sales cycle. I think this year is going to be just like last year. I think the high sales number are going to be in the spring, sometime in May, maybe creeping into early June. But I think the high inventory number isn't going to happen until late August, September, just like 2024. And again, the reason I think that is slightly tamped down demand. And if demand is down a little bit, those houses that continue to trickle on into the summer that usually get purchased, driving inventory down, that's not going to happen. And so those numbers are going to continue to increase throughout the summer into the early fall. Lastly, forecast number 5, closed sales. I think it's going to be up again this year. Not quite as much as last year, 7 to 9% increase in transactions, somewhere between 22,000 and 23,000 homes. So of course, a year from now, I'm going to do a review of these things and we'll see what happens. In the meantime, if over the course of 2025 you are thinking about buying a house or selling a house, I would very much like to show you the systems that I've developed and the strategies that I use that can help you. There have been some significant changes in the marketplace, the way real estate agents and real estate brokers like myself do business, and I can show you how to navigate these waters. Think about it this way. The systems and strategies that I use on the buy side would be like somebody giving you a check for $50,000 or $100,000, and the same on the selling side. There are things that I do that nobody else does, and I'd love to show you. You can call me at 949-413-2371. You can email me, michael@housemgroup.com. If you're watching this on YouTube, right above my left shoulder, there's a little letter I right up here. Click on that, and that will take you to a landing page that has more information about the way I work. I appreciate you watching. Thank you so much. Oh, I should also show you. For Christmas, my wife got me these cufflinks. I don't know if you can see them in the video. This one says sell, and this one here says buy. Absolutely love it. Thank you, baby. Because I'm happy. Clap along if you feel like a